Hello and welcome back to BharatBulls, where we show you how you need to think in the market to be in the top 1% of traders. The aim of this channel is not to get you rich tomorrow, but to steer you in the right direction so you become independent in your trading career. So, how is it going, guys? We are back with another historical analysis video, and this time we are asking ourselves the question: is history repeating itself in Bank Nifty? So, as you notice, the market has been pretty turbulent in the last couple of weeks after witnessing a very good uptrend in the last few months since March. The market is experiencing some sort of a pullback, and this was expected. We were kind of expecting this. I will link a video in the description that explains why this pullback was sort of expected in the market. I've done a historical analysis on this in my first video on the channel, where we deep dived into how many times Nifty printed three red candles consecutively on a weekly time frame. And this time also we're going to do a historical analysis and see some interesting trends that have been playing out in the market and compare that to a previous year where similar trends were observed. Now, what is interesting in this is that this is very similar to that year, and you'll be surprised to know why this actually caught my eye. So the year that I'm talking about is 2018. We're going 5 years back in this video. So if you remember, 2018 was a very turbulent market. We had several bull runs and several bear runs together. So on the face of it, I can spot two bear runs right at the face of it and two bull runs um, um, on their own. Now, what's interesting about this is, and I've been saying this in the last, I've been saying this in the last couple of videos as well, that we are in the pre-election year. In the pre-election year, the markets are always volatile. They're factoring in any change in government, any continuation in government. There are a lot of hands at play. Institutional investments don't come in that easily because no one wants to bet big on India at a time where political instability may be there. So in 2018, while most people were sure that Honorable Prime Minister Shri Narendra Modi will continue with the second term, there was still a knee-jerk reaction that played out in the markets. And we're experiencing something very similar this year. Now, what I want to show you guys, first of all, let's dive into the weekly time frame and mark some pivots first of all. So, where do you see pivots for market to potentially reverse from here? We've experienced a very sharp pullback in the last couple of weeks. So, what I'll do is take the horizontal line tool here. I see a weekly pivot over here, so a couple of weeks where the market took support in this region. So maybe there may be a stall in the prices around 43 400 or 43 500. So keep an eye out for any wide range candles so you spot a potential reversal or some sort of pause in the market before a further down move continues. I see another candle over here which will potentially act as a support. So these are weekly pivots on the market, and of course we have the lows of March 2023. Now, the next thing I want to take you through is the pattern that I observed over the last couple of weeks, and that pattern is very similar to what played out in 2018. So we'll take this one by one. Since the beginning of year, we've experienced a sharp retracement on the downside. This was coming off the back of retracement that started in 2022 in December or November, I believe. And then we experienced a bull run, a beautiful bull run, all the way up till 44,000. And then we experienced a pause. Now I'll highlight this pause with a rectangle over here. For a couple of weeks, we had no action in Bank Nifty. The index essentially refused any kind of fall in the market. And then again, we had some sort of a continuation on the upside once the range broke out, and we are now seeing a pullback. Now, remember this: a downfall, a bull run, a stall in the market, followed by another up move, and then a sharp retracement on the downside. What I want you to take a note of is the timing of this. We had a downfall till March 2023. The bull run lasted up till July 2023, whereas in from May 2023 to almost the end of June 2023, for 2 months the market did nothing. it just consolidated sideways, and since the start of since mid-July we have seen a sharp retracement on the downside. Now let me take you to the same analysis on in 2018. Notice this. Now everything won't be as similar because this is market and anything can happen. But notice this. In 2018 we had a downfall. Notice the date, 19th of March 2018. We had somewhere towards the end of March we stopped falling more and started moving on the upside. And we moved up on the upside till May 2018, which is also very similar to what happened this year. Now we have uh, the market stalling for the next couple of weeks. So market enters a range till mid-July. Then we have another move on the upside till sometime in August, and then we see a sharp pullback. Now tell me this is not something you're seeing right now being played out in the market. Notice that this time in 2018 this was a very steep fall. If I remember this correctly, this was roughly a 12.5 to 15% fall in the market. So if you plot it out, yes, so this was 13.5% fall in the market on the Bank Nifty chart. And if you mark the weekly pivots on the chart of 2018, so if I just take the horizontal line tool here again, we had this level where there was potential support, but the market broke this with a very wide range candle on the downside and continued to fall for the next 2 weeks. We had some strong resistance over here as strong support regions over here as well, and the market almost took support at the same level and started moving up over here. Now this support level was sometime in April. Now if we go back to the current chart where we are today in the market, we see the market is yet to breach this particular level. So if we were to follow the markets that were there in 2018, we may as well expect a breach of this level that will shake out a lot of participants. I am expecting a fall till 42,272. So this is again rough. So I'm expecting a fall till 42,300, at which point a lot of participants in the market will be shaken out. They will not be willing to bet more money. But I see a very low risk, high reward opportunity arising over here. Just on the back of a strong wide range candle, I would be very interested in taking a long trade here. You know, I'm a bull rider. I only take trades on the long side. I highly avoid taking short trades. So this is where I would be very keen on taking a long trade, because this has played out in the pre-election year and I see this playing out again. And I wanted to take some time and go and see what happens after this bear run has ended. So you will notice that the market does not go immediately and break this level. It goes up, consolidates around the same region where the previous stalling had happened. So if in our context this would be around 43,000 and then it continues to stall for the next 4 to 5 months, moves up again and is pretty turbulent till the time the election results are announced. And this was, I believe, in July 2019 that we had the election results being announced and the markets moved lower again. But I will be very interested in capturing the trend that played out from the start of October till the following June in 2019. I will be very interested in capturing this moment, and I'm waiting for the right opportunity to strike when the iron is hot. I'm just waiting for a shakedown. I may also expect some sort of support coming in at this region. It may so happen that the market stalls here and starts moving from here on itself. This will be something I will notify you guys as and when I take the trade. But right now I'm just waiting patiently on the sidelines. As you know, trading is the most boring business in the world. You need to wait and wait for the right opportunity to strike when the iron is hot and make the biggest bang off your buck. So I hope this analysis was useful to you. I will see you guys in the next one. And if you've enjoyed this content, please give it a like and consider subscribing. That really helps me out. Thank you so much, guys. And remember, keep riding with the bulls.